So Nvidia just reported earnings today, and unfortunately, the stock is down roughly 2.5% after hours. On today's episode, what I want to do is kind of just share my overall thoughts about earnings. Am I thinking about selling? Am I thinking of buying? What are my thoughts on the company? And then obviously, we're going to take a closer look at some of the earnings comments and more importantly, some important points that NVIDIA investors should know. So let's get started with today's episode. But first, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for special offer at fool.com/Jose. And I also, for NVIDIA's earnings day, do have a special coupon code 50% off on my earnings ebook. Check it out on the pinned comment below. So let's get started with today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so if we look at the overall price, right now the stock is sitting at $145 when it market closed. After hours, the stock is down roughly 2.5%, sitting at $142. And in forms of stock price, I don't think that's crazy because, I mean, we first kind of hit the low 140s in late October, so it's not like the stock is crashing. Now, let me just share my overall thoughts on NVIDIA's earnings on the top level. I believe earnings were great. If I am, and I am a long-term investor, NVIDIA is my number one position. Nothing in the earnings call made me worried or made me want to sell. Now, this is something that I usually get a lot of hate for or a lot of rebuttal for, but I want to say NVIDIA is a company that's going to be great for the patient investors. My cost basis on NVIDIA is pretty low. But if I didn't have NVIDIA right now, and if I was starting to build a position, I personally wouldn't buy at these levels a big position. This would be something where I would do very small dollar cost averaging. I believe the market gives a lot of buying opportunities, especially in the semiconductor market where so many different things can go wrong. So in my opinion, and again, I could be completely wrong, I believe patient investors are better off for NVIDIA. Right now is not a time I would heavily buy. But again, I personally wouldn't be selling at these levels either. So earnings I thought were great. We did beat earnings. We're going to see we did beat revenue, and guidance was pretty strong. But I guess at the end of the day, analysts and investors were expecting a little bit more. Now, I want to say it is important to remember that NVIDIA's chips NVIDIA is pretty much in a supply constraint market. They can't get enough supply from companies like TSMC. So no matter what, they're always kind of limited to how much they can grow per quarter. And I think that's something important to understand for every investor, right? Because sometimes maybe investors might be expecting, hey, look, NVIDIA is going to blow out the earnings by a huge amount of revenue this quarter and next quarter. But remember, at the end of the day, they are supply constrained. And that is a big reason that is somehow limiting their revenue growth. Now, if we look, NVIDIA reported quarter 3 revenue of $35 billion versus the street estimation of 33.1. So a huge beat in revenue. Now, if we take a closer look at earnings per share were 81 cents versus the street estimate of 75. So another huge beat there. Now, NVIDIA guided for roughly $37.5 billion plus or minus 2%, while analysts on average are expecting about $37.1 billion. Now, I believe NVIDIA will outperform these numbers as we continue to see strong demand. So I don't think they're completely sandbagging guidance, but I do believe they're giving themselves some leeway right now. Now I want to look at some important points that we got from the earnings call. The first thing is they mentioned NVIDIA Hopper demand is exceptional, and sequentially, NVIDIA H200 sales increased significantly to double-digit billions, the fastest product ramp in their company history. So H100 did amazing in revenue, right? Historically when it came out, but H200 is growing even faster and is now in double-digit billions. So if that revenue of data center was around 30 billion, it's at least safe to assume that at least 10 billion came from H200. So we can see that there continues to be a huge demand for the Hopper architecture. Now, when we look about the Blackwell, we also did get some great Blackwell news. So they mentioned Blackwell is in full production after successfully executed the change they talked about last quarter about the masking. And they also mentioned that they shipped 13,000 GPU samples to customers in the third quarter, including one of the first Blackwell DGX engineering samples to OpenAI. The other things that they mention is Blackwell demand is staggering and they are racing to scale supply to meet the incredible demand customers are placing on them. Customers are gearing up to deploy Blackwell at scale. Oracle recently announced the world's first Zeta-scale AI cloud computing cluster that can scale to over 131,000 Blackwell GPUs. So the Blackwell market, the Blackwell product is pretty much in strong demand right now. And I don't think I have it here. I don't know if I'll have it later on, but some great things that we also heard is Blackwell revenue for quarter four is actually expected to be much higher than previously expected in quarter three. So we continue to see some strong demand for the Blackwell platform, and we still see a hefty demand of the H200. And those two are very important because it showcases that the old product or the current generation, the H200, is still pretty strong, and no one is saying, hey, look, I'm not going to purchase any Hopper platforms because I want to wait for the Blackwell. They're trying to get anything as fast as they can, even if it's the H200. We also saw some kind of strength in their software market. They mentioned that software service and support revenue is annualizing at $1.5 billion, and they expect to exit this year annualizing at over $2 billion. So obviously the software market is going to be one with high margins, and I believe we're going to continue to see this growing at some strong levels. Now, I think it was also important to kind of get some context about the Chinese market from a geographic perspective. Their data center revenue in China grew sequentially due to shipments of export compliant Hopper products to industries. As a percentage of total data center revenue, it remained at well below levels prior to the onset of export controls. So they continue to sell in China, and that is a growing market. Now, obviously, with the new Trump administration, if we continue to see more pressure into China, we can maybe even see stricter export controls to China with AI chips. Now, this is another interesting point here was the networking side. So the networking side, which is one of my favorites, thanks to the Mellanox acquisition, grew 20% year over year. They mentioned revenue growth is coming from InfiniBand and Ethernet switches, SmartNICs, and Bluefield DPUs. Now, though, what I thought was pretty interesting, networking revenue was down sequentially. Networking demand is still strong, and they anticipate sequential growth in quarter four. Now, another thing that they mention is Nvidia Spectrum X, which is the Ethernet for AI, did increase 3 times year over year, and their pipeline continues to build with multiple cloud service providers and consumer internet companies planning large cluster deployments traditional Ethernet was not designed for. Because traditional Ethernet was not designed for AI. And this is pretty interesting because if we remember, Spectrum X, and they actually mention it here, was used on xAI's colossal 100,000 Hopper supercomputer. And they mentioned that this had the best solutions compared to traditional Ethernet. So if we're to assume the Spectrum X is used for kind of those massive data centers of 100,000 plus GPUs, and NVIDIA mentions that they're working with multiple cloud service providers, with multiple consumer internet companies to plan large cluster deployments, then it's safe to assume that a lot of companies are building 100,000 plus GPU data centers right now. And I think that is insane, and that's definitely going to be a nice tailwind for the company in the long term of things. Next, we also kind of hear a little bit about gross margins and estimates or guidance for the upcoming quarter. So gross margins dropped down to 75%. This was not unexpected. We actually knew this from last quarter because as they're shifting to more complex and higher cost systems within the data center, you will see a decrease in margins. It kind of topped off at around 77.5, if I remember correctly. And they mentioned for the upcoming quarter, it will drop down to about 73.5, mainly for the main reason as they shifting to the Blackwell, which is a little bit more complex system, a higher cost system, margins are dropping a little bit. Now, on the bright side, though, they mentioned as Blackwell ramps, they expect gross margins to moderate low 70s, but when fully ramped, they expect Blackwell margins to be in the mid 70s. So overall, it seems like while this company might be losing out a little bit on margins, mid 70s is not something I would lose sleep over, right? It's no longer the high 70s, but it's not because of competitive pressure. It's mainly just because a higher cost system. Now, for total revenue, they do expect roughly 37.5 billion. That's what we kind of talked about earlier. And they mentioned demand greatly exceeds supply. We are on track to exceed our previous Blackwell revenue estimates of several $billion as our visibility into supply continues to increase. So it does seem like the supply chain is getting a little bit better. We know TSMC is working really well to make sure they have a lot of advanced packaging solution and capacity for products like the Blackwell. So that's great news. But I do believe the guidance was a little bit weaker than what many were expecting. Now, we also do have some questions coming in from the earnings call. The first question was kind of talking about, is there some form of stallment happening in the scaling of large language models and the training, as there's this bearish thesis that, hey, look, large language models are kind of hitting a peak right now. And Jensen mentioned, nope, there's still huge demand for pre-training, post-training, and more importantly, something that I've talked about a lot in this channel is Strawberry GPT-01 or OpenAI's O1 is including a new type of scaling, which is inference time scaling, which is also going to help increase the computational needs of AI solutions and AI workloads. So there's going to be a lot of demand for the three things: for pre-training, for post-training, and inference. So overall, very strong for Nvidia there. So that's it. I want to say Nvidia didn't have anything breathtaking, in my opinion. I wouldn't say everything was expected. We saw that huge revenue beat. We see a nice guidance. We see huge demand for their Hopper 200 and for their H200 and for the Blackwell. We saw that the Blackwell is actually doing better in Q4 than previously expected, as they are getting better visibility in the supply chain. But like I mentioned earlier on in this episode, I personally, and I'm not saying I'm right, but I personally, every risk to reward tolerance is different for every investor. These are not the levels I would do any heavy buying. And I've mentioned this in many videos. Again, I wouldn't sell any of my shares right now, as it does seem like we're still in very early innings of this AI revolution, but I wouldn't buy right now. I believe patient investors are going to have a better opportunities. And if we ever get those better opportunities, I'll definitely make sure to do videos. But let me know in the comments below if you think I'm wrong, if you're buying at these levels, if you're selling at these levels. Take care, have a good day, and see you next time.